Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, it hasn't quieted down out there, has it?
I was just going to say, we better keep the shout-outs and the intro chatter to a minimum, because we've got a lot of headlines to get through this week, haven't we, to keep everybody informed. And we've got a Menable Moment partway through as well.
Yeah, and we've got a couple of updates on stories that we spoke about last week. So, we have got a lot to get through.
We'll start off with that. Yeah, I mean, let's start off. I mean, the Barbara Cox Award has been launched again, and that's again in collaboration with AM and Fleet News. The industry is now looking for the next Barbara Cox Woman of the Year award, which will be for 2024. Which there's always a lot to get behind this one, isn't there?
Yeah, definitely. And I noticed the closing date is Friday, 26th of April. So there's still a few weeks there to get entries in. But this has really gathered momentum over the years, hasn't it?
Yeah, it really does. I mean, it's a prestigious prize to win, and we know last year it was brilliantly won by Sarah Solomon, who you and I know from the EV Cafe in the Main, and she's also the Chief Strategy Officer at EV FinTech business Paythrough, and she won the award last year. She's done some great work in the sector, but obviously the recipient also won £5,000 to spend on personal development, which I think, from memory, Sarah gave away donated, so she didn't use it herself, and she's looking at nominations to donate that herself for somebody else to take. So it is a great award to win.
Yeah, and it's very well supported. The winner will be chosen by a judging panel, which actually includes past winners, which is a great way to engage and keep them involved in it. And the winners will be announced on the 5th of June at a special event.
So you say you can head over to either AM Online and on the story, which will be on the links on the newsletter on Monday morning, there is a link there to click here to nominate. So this is down to anybody that you feel is worthy of nomination for this award. Then please do nominate, or you can head over to the Cox Automotive website and you'll be able to nominate there as well. It's like I say, still good opportunity there to get some nominations in.
Definitely. And also on today's pod, we're joined by Stephen Whitton for his latest Menable Moment. And he'll actually be talking about omnichannel and the place wellbeing has within it. And I know you bumped into Steve at the Car Dealer Live event a week or so ago, and omnichannel was very much one of the big themes, wasn't it?
It was, and I've not listened to this yet, so I'm intrigued how he's going to use omnichannel in mental wellbeing, but I'll be looking forward to that one, Curtis.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Car Dealer, The Times, Motor Trade News, Motor Finance, Mail Online, and the FT. Starting with big motoring world boss Peter Waddell fuming as used car supermarket says he's taken a leave of absence. So that's an update to a story that we talked about last week. Also in the headlines, Audi becomes the latest brand to pull back from agency. But is it a temporary move? Electric car ranges reportedly fall by a third in real world conditions. That's a story that picked up a lot of coverage over the course of the week. We'll be looking at how Dacia's low price spring EV could actually place downward pressure on fleet EV pricing. And kind of closely linked to that story, we'll be looking at how Volkswagen is considering partnerships to produce more affordable mass market EVs. We'll be looking at JudgeService's data, which shows car buyers are actually satisfied with their finance buying experience, despite the FCA probe. And we don't want your electric cars, says used car dealers. So look forward to getting onto that story right at the
Stay
end.
tuned for that one at the end, definitely.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Okay, first headline this week comes from Car Dealer. And if we just rewind to last week, because we were talking about Peter Waddell, who's the boss of Big Motoring World. He was looking to buy the stock from Cazoo, because last week we were talking about how Cazoo was reversing out of sales, reinventing itself as a marketplace, and Peter Waddell moved swiftly to put in some bids on the stock. So we don't know how that's panning out, but the update is that the headline from Car Dealer is Big Motoring World's Peter Waddell fuming as used car supermarket says he's taken leave of absence. So, as I say, this broke after we recorded last week's show. So we'll start off with this one. And this is a bit of an intriguing story, isn't it, Phil?
Yeah, I mean, the always says that, the rumours are circulating that Peter Waddell has been removed from his post, that Big Motoring World CEO says he's not taking leave of absence, but the firm says he is, and that the used car supermarket boss appeared on stage, obviously, as you say there, Curtis, at the Car Dealer Live event last week. But this is kind of broke because I think Auto Retail shared a spokesperson, didn't they, comment on it, but also Pete Waddell is saying that it's not true.
Yeah, it's very much one of those stories. He said, they said. So if we just maybe concentrate on some of the quotes within the story, because a spokesperson for Big Motoring World actually told Car Dealer that Peter Waddell has taken a leave of absence from Big Motoring World, with Lawrence Vaughan, executive chairman, taking on his responsibilities on an interim basis. And it goes on to say that Peter remains an employee and shareholder in the group. Now, Car Dealer actually spoke to Peter Waddell, and he described taking a leave of absence as being a load of nonsense, although he didn't use the word nonsense. So that's where we are with this story. There's been no update since, I think, last Friday on this particular story. So we will be hearing more, I'm sure, over the coming weeks on this.
No, as you say, I mean, he comments say that I have just left the office. I own 62% of the shares. I am not taking leave of absence. I am certainly not doing that. But they say the rumours are out there, and the car dealer says that rumours are rife that Peter Waddell has fallen out with the private equity backers, Fresh Stream, which injected funds into the business and helped him rapidly expand the group. And that Fresh Stream told Car Dealer that there is no comment to make. So again, it's one of these stories that we have to be very careful, because there's still things out there that are not being confirmed yet. So I'm sure as they get confirmed, we will be able to return to this story in the future. But certainly it's catching some headlines last week as that news broke.
Yeah, definitely. And staying with Car Dealer for our next story, which is the headline, now Audi delays introduction of fixed price car sales for its EVs as another agency model cracks. Again, an intriguing story, this one, because From the report in Car Dealer, it looked as though Audi were going to roll out agency by the end of April across its EV ranges. So that's pretty much the e-tron lineup, the Q4, the GT, and the Q8. But it's actually reined back on that and is saying, although it has confirmed that it will launch agency for the Q6 e-tron, which is an all-new car that's coming later in the year. So obviously, clearly a bit of a rethink there at Audi, but they're not saying no to agency. It looks like they're just reviewing the way that they will introduce it.
I mean, this is it, isn't it? I mean, we talk about U-turns, don't we? And but clearly they're not saying U-turn. It's basically saying that it is a rethink. There is a comment in the story saying that a spokesperson for VW Group, Volkswagen Group, said that following the successful introduction of an agency model for the sale of electric vehicles to private consumers in the UK by Cupra, Skoda and Volkswagen brands, Audi will adopt the same model from April 2024, 3 months earlier than originally envisaged. Now, obviously, there seems to be a lot of conflict here of what they're doing, when they're doing it, and things like this. But it must be difficult for them, because I think there are reports that sales have been challenging, and anything that's going to disrupt sales as they're trying to recover is going to be a question into what they do when they do it.
Yeah, and it looks though that this story possibly came from some Audi dealers, because Car Dealer quotes one particular dealer saying that Audi is kicking the can down the road, and there's a definite delay to the manufacturer's original plans. So we'll see how this one pans out. But of course, it's of interest as it's hot on the heels of Jaguar Land Rover. You mentioned doing U-turns. They did a spectacular U-turn, pulling out of agency altogether. But certainly in some of the stories I've subsequently read about that, it does sound as though they got their dealers involved in it, and they had buy-in from the dealers before going public on it.
Yeah, and I suppose it's one of them things, isn't it? If once somebody goes and says that they're going to defer or do a U-turn or rethink the strategy, and that does open the door then, doesn't it, for others to sort of say, well, actually, we've been thinking the same. It's that first one out the door, isn't it? But
it is. Yeah.
It's just going to be intriguing whether we'll see others, maybe, because we've seen Stellantis, haven't we, take a review. We saw, as you say, their JLR, and now Audi. It's just whether we'll start to see other OEMs start to use this as an opportunity to rethink their go-to-market strategy. But again, I'm sure it's not going to be the last time we talk about this one, Curtis.
No, and staying with electric cars, which pretty much dominate all our stories this week, let's be honest. This was a story that caught my eye because it was actually on the front page of the Times in the middle of the week. And the headline is, "Electric car ranges fall by a third in real-world conditions." So this is a report based on some research done by What Car magazine, which found which looked at the real world battery range performance of electric vehicles. Now, as we've discussed on the pod before, those mileage figures, the range figures, they come from the WLTP, which is the worldwide harmonized light vehicle test procedure, which is something we've talked about a lot on the pod in the past, but it's making a welcome return after some time. And this is What Car actually doing real world tests on these cars, and it's actually produced a listing of vehicles with their claimed WLTP range and what Car have actually been achieving in real world driving.
Yeah, do you want to go through have you got a few of the list there, Curtis? I think you've got the top 5,
yes, yeah. So the Lexus UX Takumi, that's not a model I'm familiar with, Takumi. So the official range for that is 273 miles, but the test range, according to What car was just 170 miles. So that had the biggest shortfall. So that was a 38% shortfall, the biggest of any of the cars tested. But within the rankings, and it's definitely worth heading over to the Times to have a look at this, because it does cover quite a few brands ranging from Volkswagen, Jeep, Volvo to MG, and even BYD, and of course Tesla.
Yeah, I mean, it's again, I mean, it's a difficult one, isn't it? Because we had this initially, didn't we, with MPGs and things like this, and that WLTP went through, if you remember, back in the day with that lot. Again, talk about EVs, it's when the testing was done, and I saw something this week, I think it was Sam from the EV Cafe was on GB News. I just wouldn't like to be sat in his seat on GB News, to be fair with you, Curtis. But he was defending the fact that the different environments, the weather conditions, humidity, everything plays into the battery electric vehicle, and it is difficult for the manufacturers to do that testing in volume in the right environments for usage of those vehicles. So it's going to be challenging.
And I think, in fairness to the OEMs, they're just following the procedure that's been laid down. So they're being knocked over the head for these claims, but they're following the process that they've got to follow. So there's no winners in this story, I don't think.
No, 100%.
So after the break, we're joined by Steve Whitton for his latest Menable Moment, talking about the link between omnichannel and well-being. And Phil and I will be back with the rest of the week's headlines after that.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Menable Moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whitton.
Yeah, hi guys, it's Menable Moments time again. Hope you're well. I want to talk a little bit about omnichannel this week, and was at a conference recently, as you were, Phil, indeed, and the theme of the day was predominantly about omnichannel. Now, I've got to be honest and say that to me just sounded originally like some kind of sort of nerdy, techie kind of language, and I wasn't really sure what it meant. But recently, I had the absolute pleasure of spending some time with Jason Cranswick. Big shout out to Jason and the team at Norton Way, by the way. And in his office, he's got this massive, great visual kind of mural, I guess you'd call it, or mural if you're old enough to remember that. Anyway, a mural on his wall, and it basically depicts what omnichannel looks like, and it's all of the ways in which a customer can interact with your business, whether that's face-to-face, on site, over the phone, or digitally, or whatever. And I thought, oh yeah, of course it makes sense. Now I understand, I can join the dots now, I get what that means. But at the heart of all of that is people. And that was the one thing I took away from that conference, which was that in order for us to deliver all of that, and there's various different stakeholders and different people involved in each of those parts, at the core of it all is people. And if our people are in a good place, then our business is going to be in a good place. So how do you achieve that? Well, again, big shout out to Jason. The way he's achieved that is through sharing that vision and communicating. He's got the big picture on the wall, and everyone absolutely can see at a glance, especially if you're a very visual person like I am, you can see very much at a glance, where does that actually fit? And more importantly, where do I fit in that process? So whether I work in service or in sales or fleet or back office, or whether I'm part of the digital team or whatever it might be that I'm doing for a business, I can see absolutely clearly, looking at a diagram like that, where I fit in. Now, of course, the next part of that is getting all of those pieces, those components, working together. And recently, I've been very buoyed up, I've got to say, by the team at Sandycliff, second shout out. and Tony Jackson there, who's the GM, and he's waxing lyrical about how for the first time for a very long time in his business, he can really sense and feel the cohesiveness that's happening between managers. And it would be very easy to claim credit for some of that, but all I would say is that the key to that is communication. And it's back to those 5 critical success factors that we talked about before. Communication, management commitment, training, recruitment, and purpose. And it's not complicated. It's not complicated. And what we're starting to see now is that more and more people, when they're involved, when they're a part of it, when they're a part of the solution, if you like, they actually take ownership. And that in itself increases people's mental wealth. They feel as though they're part of something, they're included, and they feel like they have a purpose. So my point is, around all of that, I've learned something in the last couple of weeks, and that is absolute clarity on what omnichannel actually means, especially in our industry. Also, that our industry can have a tendency to work in silos. So if you're in sales, you work there. If you're in service, you work there, and so on. And the key bit to bringing all of that together under this sort of umbrella of omnichannel and understanding all the different parts that go to making a modern retailing business absolutely is people. Now, recently, and again, another shout out to Motors who sponsor us for this. So thank you guys for keeping the support going. Recently, we are doing more and more work around the management toolkit that needs to be in place to help managers to help their team to navigate all of this new stuff that's coming their way. And some of it's not new, some of it's been around for a while, as we know, but you know, to many people out there it's new, or it's new language, new way of thinking, new way of looking at things. But managers need help with that too. And if they're anything like I was, many managers out there have come into their role, they've never had any development, never had any training, never had much in the way of support. They've been plopped into a role and pretty much left to get on with it. Out of the paddling pool and into the North Sea, well, I think was the phrase that one of my managers used once for me. So anyway, if you want any more help with that, if you, like me, have a few light bulbs going on all the time and you suddenly think, I need to help get my team thinking about this, or joining up the dots, or being more cohesive, then give us a shout. You know how to get hold of me, stephen.whitton@menable.org. And one final thing I would say, and I've been surprised at this actually, because I put out a little phrase recently that I've started using in my conversations with people about joyous experiences. Now, I thought that phrase, because of the word joyous in it, I thought I might get some, a little bit of banter, shall we say, about the level of femininity that suggests. But I don't care. And I'm keeping it going because it's absolutely what we should be doing. We should be delivering joyous experiences for our customers, for our teams, for the people around us. And I've been surprised, actually, that how I've been talking about that recently, and it's been fairly well received. And people have been saying, oh, yeah, that's exactly what it is all about. Joyous experiences, whether you're buying a car, servicing a car, whether you're a part of a fleet, doing that digitally, whatever. Every single part of that should be a joyous experience. So again, if you want any help, give us a shout. I'm on LinkedIn as well, or the Menable website, menable.org. And I will catch up with you again soon. Take care. Bye.
Well, Phil, like you, I was intrigued to see how he was going to make the connection between omnichannel and well-being, but he did it, didn't he?
He did, yeah. Did it very well. Very well. So
I tell you what, I would like to see that wall chart that Jason Cranswick's got in his office. I think that would add a lot of clarity to the whole omnichannel debate.
It would, yeah. And I know Jason does listen to the podcast. So either if you've got the image there, Jason, or you want to come on, talk about omnichannel in your space, then please do reach out. But as Stephen has said there clearly, if you need his help, you need to get in touch with Stephen, then as always, you can do that through social media on LinkedIn predominantly, or you can check out their website, which is menable.org. That's menable.org, or Stephen That's with a ph.whitton, WHITTON, at menable.org if you want to drop Stephen an email. But back to headlines and EV again, Curtis. So going over to switched on EV, and this is Dacia spring pricing could place downward pressure on fleet EV pricing. Now, we covered the new Dacia entering the market and their new price point, but this is coming at it from a fleet perspective and the challenges that this could cause within the fleet sector.
Yeah, this is on the back of the announcement during the week of the price of the Dacia Spring, because when we were talking about it a week or so ago on the pod, the speculation was that it would be priced at or around or just under £16,000, but it's actually come out at £14,995. So it's under that £15,000 price point, which is extraordinarily cheap, competitive for an EV by a long way. I mean, it is pretty much half the price of the existing cheapest EV. So orders for the Dacia Spring have opened this month, and for retail buyers it's available for a £99 deposit. So it's that they are going to do so well with this car. It's whether or not they can maintain supply to keep up with demand. But this story is of interest because it's very much the sort of fleet perspective and how this low entry point will play out in fleet, because it's Peter Golding from Fleet Check, who are one of the fleet software specialists, that they've looked at the pricing and how it could actually affect other vehicles within fleet. And he makes a valid point that the Spring, it's not really a fleet vehicle, because to get that price point, it's got a fairly small battery with just 137 mile range. I don't. Well, presumably that's WLTP, isn't it? So
yes, I was going to say that, Curtis.
Yeah. It's going to be less than that.
I would say so. Yeah,
potentially.
Yes.
And what he's saying is that fleet certainly user choosers will be expecting to drive cheaper cars, and fleets will be expecting to buy cheaper EVs as a result of this entrance.
Well, this is it, and this is the whole question that's coming on. And they do make the point at the end of the story around residual values. I mean, we touched on it when Carlos announced a 30 to 40% decrease in their EVs by 2027, what that would do in the fleet sector, and particularly the impact on residual values, because suddenly you have these 2, 3, 4-year-old vehicles coming back into the sector as a used vehicle proposition, but suddenly you're competing with a brand new £99 deposit new car for less than £15,000. Well, where does that leave you when you've got a residual value set as a used 2, 3, 4-year-old car coming into the market at a similar price for a 3-year-old vehicle? This is the challenges that the fleet sector is now starting to see. And like you say, to the consumer, the general consumer, the buyer of that used battery electric vehicle, do you enter the market around, sub 20, sub £30,000 for a 2, 3, 4-year-old EV, or do you go and buy yourself a brand new one, albeit with limited mileage range on it, etc., from a Dacia showroom? And this is what's starting to present itself as these things start to emerge. So I think they've called out some interesting points there, and that thinking about that whole fleet sector and sort of saying that the role that made possible by its price, thinking about the pricing of that fleet sector and where they operate.
Yeah, and we will actually be returning to this theme. What happens at the back end in our final story this week. But there's an interesting point that's made within this story from Peter Golding, who says the key here is that the spring immediately makes every other EV look like poor value and could lead to a domino effect. Suddenly, 200-mile range super minis priced at around £30,000 appear overpriced, and they will probably need to readjust. This could impact on the next class of car up, and so on, having a domino effect. So, yeah, this really has put the cat amongst the pigeons, hasn't it?
It has, yeah. And remaining with EVs, and the story in the Financial Times is that Volkswagen consider the partnership to produce mass market electric vehicles. So again, Volkswagen is considering partnering with other car makers to produce a cheaper electric vehicle to help it compete with the coming wave of lower cost rivals such as China, and probably things like the Dacia that we've just been talking about there, and that the world's second largest car maker plans to decide later this year how to produce an EV costing less than €25,000, the equivalent of 21,000 sterling. But again, is that going to be cheap enough when you've got things like that we've just been talking about there, Curtis?
Yeah, because that's €25,000. That equates to what,
21,000
21,000?
sterling, something like that.
Yeah, and yeah, this story actually really intrigued me because it does actually kind of make a lot of sense, and there is a precedent for this, of course, because we've seen manufacturers collaborating in the past. Especially on van production, where we've had the likes of Vauxhall and Renault working together, PSA and Toyota working together. In fact, PSA and Toyota also worked together on the city car project, which resulted in things like the iGo. So Volkswagen have made a stand here, and I should imagine that they're going to get quite a bit of interest from other OEMs.
Yeah, I think this is all about, they've got to get that supply chain, that vertical efficiencies going. And some of that, like you say, this will come through collaboration partnerships with other manufacturers in other markets that help them do that. I mean, without going into too much detail, the benefit of BYD and Tesla in terms of their pricing structure is their efficiencies of production. They've got those vertical integrations in place. They have the supply in-house, and that's what makes them cost effective and productive. And that's where the manufacturers have got to try and get ahead. Now, whether that can be done in-house or as VW there are stating that they may have to go to partnerships to be able to do that, to get those efficiencies, to get the price of these EVs down, to be able to compete with whether that's new entrances from China themselves or such as Dacia and other manufacturers that are entering the market very quickly at those low cost of entry points. So you can see this one starting to play out because, whether that's, your Renault and other manufacturers you've mentioned there, Curtis, it's not new to the sector in terms of these collaborations and partnerships, but you can see where this has got to come quickly for some of the incumbent manufacturers because they've got to become efficient. They've got to get those prices of those vehicles down, and by doing that, it's about cost effectiveness of that supply chain. So
and I do urge you to check out the full story from the FT. We'll put a link in the newsletter on Monday because it is very detailed. And one of the stats that really leapt out was that they say that EVs in Europe tend to cost €15,000 more to build than their ICE equivalents, and of course closing that gap is now crucial to persuading customers to switch and also to compete with these new entrant brands that are coming in from China, Vietnam, and indeed the US over the coming years.
Yeah, we'll the link will be on the newsletter on Monday morning. But I'd urge you to take a good read of that because there's a lot more detail than we've managed to cover today. But heading over to Motor Finance Online, and this is high levels of satisfaction reported in car buyers finance experiences. And this is a research study done by JudgeService saying that in 2020, 91% of buyers reported satisfaction with the explanations provided by dealership staff regarding available finance packages. Now, this figure increased to 93% in 2023. Now, this is an intriguing story, if nothing else, Curtis, in terms of the findings from JudgeService here.
Yeah, definitely. I actually worked with the guys at JudgeService on this release, and the stats are fascinating because the backdrop for this is of course, the FCA probe and Money Saving Experts, the campaign that they launched, which during the week they recorded a million downloads from the websites. This is the template complaint letter that Martin Lewis has been urging car buyers to fill in and send if they feel that they were missold. But this research, it's more sort of historical, and the context is that in 2020 and then again in 2023, buyers, when asked, were actually happy with the finance that they'd been sold and they had bought. So it does actually raise the question as to who are these unhappy customers now, because they were happy then, but they've now got the option of making a complaint. And well, as I say, a million downloads later, a lot of them are taking that option.
The cynic in me says that potentially the carrot at the end of this is maybe the driving factor with some of this, which is the risk to the sector of the whole thing around the FCA, and what they eventually decide is the risk into it. That, as you say, two surveys there by JudgeService, 3 years apart from each other, clearly saying that there is a satisfaction of the way they are being treated by the retailers, by the dealerships in the finance offerings. But obviously, with what Martin Lewis has got involved with the FCA and the discretionary charge situation at the minute, kind of intimates otherwise, doesn't it?
Yeah, and then there's a telling quote here from Neil Adley, Managing Director of JudgeService, who says, many car buyers are also savvy consumers. They understand that dealers earn commission on the finance they sell and are more focused on agreeing finance deals that are fair and affordable. However, because of the ballyhoo around possible mis-selling, many of these customers will now be looking to be compensated for something they were satisfied with. So there you go.
Yes. I think Neil has the same view as we just did there, Curtis, doesn't he?
Yes.
So again, it's all bubbling on in the background, all this. I know the FCA is meant to be declaring its decision by the 24th of September. There are rumours that they'll probably ask for an extension because of the complexity with this and the potential impact. I think we covered the story the other week. I mean, Lloyd's have put on 450 million on side.
Yeah.
Bear in mind, Lloyd's is partly owned by us, the taxpayers.
Yes. Yeah.
So, same. But we will move on to our final story of today before we get too involved with politics and drawn into it again. And we are heading over to finish today with the Mail Online, the Daily Mail. So the story is that we don't want your electric cars. Why half of used motor dealers are reluctant to buy second-hand EVs. And this is saying that a survey of used motor traders identified big concerns about EVs, 2 in 5 much less interested in stocking them following last year's price fall, and the 30 used EVs that have plummeted most in value in 2023. So, yeah, I mean, I wouldn't expect any less than that kind of headline here, Curtis. But
Yes.
Interesting findings, especially by the people that have done it as well.
Yeah, so this is based on research that was carried out by Honk Honk, and anyone unfamiliar with which is a great name. Anyone unfamiliar with Honk Honk, they're basically an alternative to We Buy Any Car. In fact, they actually promote themselves as an alternative to We Buy Any Car on their website. So it's where car owners can go to get a valuation on their car and sell it, and these cars then get sold on to dealers who bid for them. And within the research, it found that more than 1 in 3 dealers said that they are much less interested than 12 months ago in taking an EV off somebody's hands, so a private seller, while 1 in 8 are a bit less interested, having seen thousands of pounds being wiped off the value of these cars when prices plummeted last year. So this really takes us back to what we were talking about in that Dacia Spring story. It's the impact of residual values at the back end, and how attractive those vehicles are for dealers to actually stock and put on their forecourts, and for customers to actually buy. And the jury is still very much out on this.
It's difficult, isn't it? Because it does lead into the story we covered last week, which was based on my research around the forecast of fuel type. We know that diesel is going to become, as low as 3% of the market share by the end of 2027, and petrol is going to drop down to 35%. So the shift towards EVs and plug-in hybrids is moving very, very quickly, and it has been now, as we know, since the pandemic. So these motor retailers, it's kind of as a question: if you're not going to stock them, what are you going to stock? Because it is getting harder and harder, and there's a recent poll here that's quoted within the story by almost 12,000 drivers by AA Cars, found that almost a fifth, 18%, are more open to buying a second-hand EV in the next 5 years as a result of falling used prices. So the consumers look like they are reacting, that the entry point is getting lower, as EVs are becoming more affordable, albeit the challenges, to the point of the Dacia story earlier, is who takes the pain, who takes the financial pain. But it is that disconnect at the minute, whether that's leasing company, motor retailers, and getting it out to the consumers. But I'm sure we'll get there in the end. We've just got a period of pain, Curtis.
Yes, yeah, and it's probably a good time to mention that every month, towards the end of the month, we actually look at the wholesale values, and with a particular focus on EVs, which is provided by Darren Martin from Cap HPI. And as we've been seeing over so many months now, on a month-on-month basis, those values are coming back. They are coming down. So we've got to see where they go this year.
We're looking forward to that in a week or so. So stay tuned for that one. But I think that's it. We've got through a lot of stories there, Curtis, haven't we? So they will be on your newsletter on Monday morning. That will be out through the LinkedIn newsletter from Motor Trade Radio podcast. All the links to the stories we've covered today, so you can have a look at them in more detail, will be on that newsletter. So if you've not subscribed, you can subscribe through finding the Motor Trade Radio podcast on LinkedIn, and look out for the newsletter as it lands in your feed on Monday morning at 8 o'clock.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.